The NSE down again, and besides the festive season approaching, a lot of concern that even so there are not the right systems in place for an upturn. And despite government saying that confidence has returned to the market, yesterday we had the Minister of State for Finance on CNBC Africa saying that investors are still pretty much waiting in the wings for something to happen. Is that the right sort of assessment of the market right now?
To a large extent, yes. That is what we're seeing. I think the issues with the market are likely like threefold right now. First of all, seeing investors taking a wait-and-see approach, just like you've said. There does appear to be liquidity in the banks, but I mean, they aren't lending, certainly not for the purposes of trading. And then we're not seeing the kind of strong results that we would have expected to see. For the banking sector, and we all know what the issues are. Even for the banks that the CBN had said are in safe positions, we're still seeing making significant write-offs that we quite frankly we weren't expecting to see anymore. And so the market isn't getting the kind of information it expects to get. On the non-financial side, however, some of the companies have actually done appreciably well, but still not enough to move the market. If we still remember the fact that the banking sector contributes to the largest portion of market activity. If we look at companies like AP, Flour Mills, the cement players, CCN and BCC, and WAPCO, they haven't done so badly over this time, but those good results haven't been strong enough to move the markets.
I want to just focus in on those banks because, of course, that news out this week that Intercontinental had recovered $524 million US in bad loans, but still investors saying that they need to recapitalize that bank, even if they do reach the 100 billion naira mark that they hope at the end of the year. But do you see them issuing a bond, especially with government saying that they plan to increase the bond market by fivefold over the next 2 years?
For Intercontinental, very good news that they've been able to make the kind of recoveries they have. But in terms of being able to raise a bond or embark on any capital raising activities, I still think they have a lot of internal cleanup to do first before they can start to embark on those kind of capital raising activities or mergers if they actually want to. Yes, the government has said it wants to deepen the corporate bond market. And if we look at the fact that from the budget, the government has a deficit to fund, there are indications that it will fund that from domestic capital raising, and so that's probably one of the reasons why they've made such pronouncements. And it does appear that they would be able to get cheaper debt internally than they would externally, because recently issued monies have seen yields at about 8.3, 8.6%.
So do you think that they'll be able to meet that 100 billion naira mark by the end of this year?
Those are the markers that they have given. I assume that for them to have made such predictions, they have put the processes in place to be able to make such recoveries.
Just moving on to the more macro view, President Omar Yar'Adua is expecting to increase his budget spending by 32% for next year. They've obviously got to get the money from somewhere, or some of the money from somewhere, and I guess they're going to be turning to the bond market.
Yes, true. Looking at the budget, you have about 2.5 trillion for recurring expenditure. There's an extra of 200 billion that the government will have to fund. That's just on the recurrent expenditure side. Looking at the capital expenditure side, that's about 1.3 billion. And so the government has a deficit of about 1.5 to fund. And yes, it does look like they'll be looking at raising those monies from the internal bond market.
Just some news today. Today is the first day of the African Securities Exchanges Association annual conference. The theme is global crisis, opportunities for African capital markets. Where do you think capital markets in Africa are failing to capitalize on the global downturn, and in particular focusing on West Africa?
Looking at the major bosses in West Africa, the Nigerian markets, the Ghanaian markets, I think one of the things they've not being able to take strong advantage of over time is being able to improve their processes in terms of technical efficiencies, especially within this period of time that there have been global issues. I think that this would be a good time for us to be able to sort out whatever internal operational issues that the bosses have, priming us or putting us in prime position to take advantage of opportunities that would occur when there's a global economic recovery. The opportunities within the Nigerian, within West African markets, and the attractiveness of transparencies in the running of the bosses would make it more attractive for international investors when that period comes.